This has been such a remarkable year for IPOs. I have to ask you, do you think that institutional investors will really be licking their wounds from the returns of this year next year, or will they be kind of shrugging off this grudge and saying, you know what, IPOs have worked in the past. Why should 2022 be any different?
I think the short answer, Leslie, is that yes, I think they're going to be much more wary, both institutional and retail investors. I mean, we've seen retail investors race into so many of these stocks. And I think it was really, we started 2021, if you remember, it was right after Airbnb and DoorDash soared to sort of unimaginable heights in their debuts. So Roblox just waited because they were worried about going too high. So there's a sense for a lot of this year, it was like, how high can these things go? And let's get in before we miss out on these big gains. Now investors, as you said, have been burned in a lot of them, especially kind of the hottest, biggest name IPOs. So I think there is going to be a lot more wariness on the part of investors going into 2020.
It seems like ancient history where the biggest problem was too much of a pop on the first day of trading, especially what we've seen more recently. Data has shown, though, that it was really the retail investors, especially in the early part of 2021 in some of these names, that helped become kind of the marginal buyer that drove these stock prices so high on their debuts. Do you think the retail investor will be as big of a player in 2022 as well?
I think they'll still be there, and I think it will continue to see volatility. I think the sort of Reddit crowds are not going away. But I think in the IPOs, I think it seems like there's more wariness there. I mean, I think what we've seen is the retail investors have driven up these stocks, and then the pullbacks have been so much more pronounced because of that.
That's a good point.
So, yeah.
And retail, of course, also played heavily in the SPAC world, special purpose acquisition companies, as well as in some of the Chinese companies listing in the U.S. Both of these areas are facing pretty significant regulatory headwinds heading into the new year. Do you think they'll play as big of a role as they have in the last year or two with regard to the IPO market?
The SPACs and the Chinese listings specifically?
Yeah.
The SPACs, I think we will still see them. I think there'll be, a lot just haven't materialized. I mean, there was so much interest, but a lot have never happened. They've been voted down. We've seen pullbacks in SPACs. So I don't think they will be as big of a force. And Chinese listings, I mean, I don't think we're going to see very many of them at all, especially, Didi this year was one of the biggest, it was the biggest foreign IPO since Alibaba. And it was a complete disaster for investors. It's on the verge of delisting, moving to Hong Kong. And Didi is the Uber of China. So I don't think we're going to see very many. And I think that will really curtail some of the IPO activity, both SPACs and the Chinese listings.
Historically, the private markets have been kind of a lagging indicator following the market in terms of how those names are valued in the private markets. But lately, that hasn't necessarily been the case. There's so much dry powder within the venture capital community and the private equity community growth stage, as well as, of course, all of those SPACs still seeking a target, that's kind of kept valuations a bit higher in the private markets. Do you think that ultimately catches up, or because it's longer term capital, it just kind of is able to stay steady and then ultimately go public, and we'll see where those valuations are?
It's going to be interesting. I think to your the question, the private, there's still so much capital inflating valuations. It's not going away. So I think it's just going to keep some companies this year on the sidelines. It's going to be interesting to see what happens with it. But every day we see a new fund in the private markets raising the biggest fund ever, whether it's like a Tiger Global or Sequoia. The private equity is racing into these companies. So I think those valuations for a while, at least, will stay pretty high. And then the question is, where does it go when they go to the public markets, and how will that all shake out?
Yeah, for all of the invention and creativity surrounding new processes to take companies public, whether it's direct listings or SPACs, at the end of the day, companies will still sit on the sidelines if they can find a cheaper source of capital from the private markets. That's a great point. Thank you, Maureen Farrell of the New York Times. Appreciate it.